Okay, I want to take this in two different ways. First, I think on the macro side, you can't deny that it is very clear that they are going to run the economy hot for a while here,
Yeah.
right? Every signal possible is alarm bells are going off that is where we're headed. More rate cuts likely coming, whether they come under Powell or whether they come with Trump's puppet, whoever comes next. I think more rate cuts coming. The QT just ended. QE could start in 2026. We'll see. But certainly there is a necessary belief within the US government that they need to win AI. And the best way to do that is to increase spending and to invest, right? So that feels like on the macro side, I just see that as a setup for 2026 where risk assets likely go up. Now, I don't mean we can talk about which risk assets in a second. Would you agree with that take?
Yeah, it makes sense. So we're going to just see a ton of liquidity, and liquidity drives markets. I mean, the minute that they gave up on the austerity talk and said, we're going to grow our way out of this as we add trillions to the debt, it's pretty clear exactly what they plan to do. You can handicap your bets on whether it will work or not. And that's obviously up to you. But as I said, I don't think Trump wants a depression before midterms. So I think that we have a very good setup for the next, 10 to 11 months. Your point about what is or is not a risk asset is definitely worth discussing. I think it's very interesting that gold continues to kind of climb towards highs or consolidate under them now. S&P continuing to make highs, tech continuing to make highs in this very long consolidation period where Bitcoin languishes. And the holy grail for investors is to have something that is not correlated, even if that thing goes down when all the other stuff goes up. So I think that Bitcoin actually, even though it hasn't gone up like everything else, it's a great case for having it in your investment portfolio and showing that it's uncorrelated, which I think we've been screaming about for a very, very long time. But I do think that we still have the ingredients for an everything bull run. And if you listen to Paul Tudor Jones, for example, talking about the debasement trade, which that term that Bitcoiners have been screaming about since 2008 is finally really catching mainstream, like attention, because JP Morgan talked about it, Ken Griffin of Citadel talked about it, Paul Tudor Jones talking about it, like the biggest names across the board. They all had a different approach to how you should invest, to hedge against this debasement trade. Every single one of them had Bitcoin in them. Almost all of them had gold in there. Some had silver, but Paul Tudor Jones included NASDAQ because he thinks that, all of that value will just pour into tech stocks. That's where investors are used to throwing their money. The Mag 7 is the stock market at this point. So there's an interesting argument to be made for sort of this everything rally. If you're saying gold, Bitcoin, and NASDAQ, you're basically saying everything continues to go up in this crack up boom.
Yeah, it certainly feels like to you and I and a lot of our listeners, the debasement trade is nothing new, but it feels like to the rest of the world it is new, and we're still very early. Like I got to imagine that everybody that trades through a broker and maybe doesn't, manage their own trading is talking to their broker right now, coming into year end, looking at their portfolio, doing their review, and I'll bet one of the biggest talking points for these brokers is the debasement trade and how important it is to get you in on that. And that has a huge impact on it.
It has a huge impact.
Hit yet.
I think it has a huge impact. And at the same time, you have, I think, $7.5 trillion sitting in money market funds, earning a yield that every rational person knows is going to drop, right? Like, that rates are coming down. That even if Powell is somewhat resistant as rates come down, that, as you said, once we get the Trump puppet in May, it's going to come down massively. All of that money is going to have to find a home that's not in bonds, right? And so 7.5 trillion will be coming off the sidelines, regardless even of how much liquidity the Fed or the central banks inject. It just really is a very rational setup for more liquidity coming into markets. And the people who are sitting in the $7.5 trillion of money markets are not like poor people struggling check to check, right? I mean, these are investors who move their money actively between markets to say, listen, I don't want to be in stocks right now, so I'm going to go earn this yield, or the yield is high enough that it justifies not taking the risk on stocks. When that yield comes down and no longer justifies holding government debt, people are going to have to find somewhere for their money. Where's it going to go? Into assets. That doesn't, listen, there could be more sellers than buyers even in that situation, but the setup is there for sure. And yes, I think that debasement trade is a growing conversation probably with people and their investment advisors, and they're going to be starting to look to rebalance those money markets.
Why do people invest in real estate? Because it spits off cash flow. But I'm not here to manage rental properties. That's why I'm looking at Figure Markets. Their new democratized prime product backs your money with real cash flowing assets and returns up to 9% APY. It's the first real world asset borrow lend pool built for everyone, not just institutions. Ready to lend like a bank and get more than the 5% Aave is offering you? Download the Figure Markets app today and get 9% on your idle funds. Go to milkroad.com/Figure Markets. When you look at the market right now, let's take a step back. I want to talk about the what's a risk asset and altcoins in a second, but
those are risk assets. Conversation's over. No,
those are the riskiest of assets. When you look at the market right now, let's take it from two perspectives. I'd love to know like what confuses you about this market, because I think to a lot of people, there's a lot of confusion right now, versus where you have certainty or where you have conviction in the market.
I'm buying the hell out of Bitcoin dips. Like, I love this. I want lower. I have cash on the sidelines. When I earn money, I want to buy Bitcoin with it. So I would much rather do that at 100 than 130. So like nothing that's happened with Bitcoin price action has shaken my conviction there that that's going to be a good asset to hold over the long term. Again, if it goes to 80, I'm buying. If it goes to 75, I'm buying. So I'm not talking about immediate price appreciation from here. Nothing would surprise me in the short term, but long term, I expect it to be much, much, much higher. So I'm enjoying that price action and doesn't concern me. And I have high conviction there. I think what confuses me, if that was the question, is I won't say I'm confused. I will say I continue to be surprised for years now on the ability of the government to manipulate the market and find creative ways to make sure that things go up and to, like I said, pull this lever a little forward and pull this one a little back to just keep the party going nonstop. I mean, where's the recession we were promised for the last 2 or 3 years, right? How wrong were people on their predictions about when the Fed would pivot before it became so obvious? Literally years where we saw next meeting 85% and they didn't cut, right? And so I just think that we're at this extreme bipolarity in opinion. It's nobody's like it'll chop sideways. It's either on very extremes. It's almost like politics, right? You have one side that's so bullish it'll never go down. Even if we get the debasement trade, everything goes up. And even if things go bad, everything goes up, because where else is your money going to go? And the other side is literally at like the fourth turning Great Depression. Then nobody's like, it'll just kind of go up or down 5% the next year or two, right? It's like doom on one side and complete euphoria on the other. Something I found really interesting last week, if you want to show the level of confusion, not necessarily to me, but I think to the market in general, was that the fear and greed index for the S&P dipped into fear on a day when the S&P made a new all-time high.
Really?
So yes. So usually, obviously, at all-time highs, you're experiencing greed and it's ticking up. I can't remember in tracking that metric, which is not something I look at every day, where the fear was growing as the market was rising. Right. A very, very strange thing. Obviously, crypto is in extreme fear at this point. Bitcoin may be fear, but if you look at the whole crypto market, dipping towards extreme fear. And that makes sense when altcoins are making new all-time lows, right? But very, very, very confusing for the market to be absolutely ripping and people to be fearful writ large. Very strange.
And where do you think that comes from?
Because none of it makes any sense.
Yeah.
Like you can't, there's no way that you can kind of like consume all of the data that exists and then, the data, the sentiment, the research, and make sense of it, because so much of it is so conflicting. Like gold having a historic rally should coincide with stocks dropping. Right? You shouldn't have those two things both rallying together. And the dollar was down, but it's not like dying.
It's not down that much.
Right. And
it's actually kind of up right now. It's creeping up right now.
Yeah. It's had kind of a nice bump. So I just think that the old memes of the past, the inverse correlation of markets to dollar strength and gold ripping from under 2,000 basically to over 4,000 with barely a break when you consider the size of something like gold. I mean, you're talking about like 12 to 25 trillion in market cap. There's, for anyone who, by the way, says, you know, that like Bitcoin can't 10x because it's too big already at 2 trillion. Okay.
Yeah.
Okay. Gold's like, hold my beer and my bottle of tequila, because it can happen, right? And so I think that there's just no way to, it's very difficult to make an educated guess on where markets are going next. And I think that naturally breeds fear because, you know, markets hate uncertainty, but if you have a bunch of uncertain participants, I think everybody just kind of got their finger on the trigger in both directions. Like they don't know which one they want to pull, like the buy or sell at any given time. Like, do you feel confident buying a bunch of stocks right now? Like, is that
Like, no, right?
But did you a year ago? Probably not
but
still, right?
no,
So
exactly.
yeah,
Because
it's
a
just
year
very
ago, it
weird.
also didn't make sense, right?
Right.
And then as we go into, you know, as we look to likely end this year with another year of the S&P up 20+%, like that's not possible, right? Would be the, but then again, as you said earlier, apparently recessions, the other side also isn't possible anymore,
Yeah, they're
right?
legal.
So it you can make sense of it not making sense in a way because you can see the trap that every government is in right now, right? And I think that I really make a big connection to AI and the AI race, right? Governments have no choice but to grow their way out of it, grow their way out of the debt, keep spending, increase spending. There is no other choice. Austerity won't work. Well, I mean, I shouldn't say austerity won't work. It probably could work if somebody wanted to go that path, but nobody does. And so they're stuck. And then at the same time, you have this technology that's come around in AI that's never been here before. And if you don't become a part of the future of AI as a country, then you're gonna drop down the pecking order, and no country wants to take that risk right now.
Yeah.
So it's just, but then it all comes back to it all comes back to really the altcoin question, because I agree with your let's talk about altcoins for a second, because I agree with your take
I'm literally
on
looking,
Bitcoins.
by the way, Bitcoin broke 100 like November 24.
November 24th, just a year
$6,000
ago.
over 100 right now.
Yeah.
So we're within 6% of the price 50 weeks ago, not 52 weeks ago. So not quite a year. Like, and it went to 74 in between there, and then it's kind of held 100 now for, you know, the bulk of the year. But Bitcoin hasn't really gone up in a year. I mean, there was a point in, I'm looking December, like right around Christmas, where it was 109. Remember, it topped at 109. That's above the current price at Christmas last year ish. Yeah, it's been a pretty good, and gold has, you know, done what gold has done. The S&P is up massively. Everything's up, and Bitcoin really isn't. And altcoins are down mostly. I haven't looked at Ethereum on the weekly, you know, on the, I don't know where Ethereum was exactly a year ago, but I think it's even down from that. Well, no, I guess Ethereum coming into last year was down in the 20 somethings, but I mean, by March, Ethereum had hit, you know, 41, and we're down from there, obviously. So it just a little delayed, but yeah, I mean, it's just not good.
Want insights on what's moving crypto markets and how we're trading each event? Subscribe to our channel and join the Milk Road Daily and Pro newsletters and start investing like the top 1%. This show is for educational purposes only. Nothing we say is financial advice. Investing is risky. Never invest more than you can afford to lose.